Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
The 18th EY World Entrepreneur of the Year Forum is currently underway in Monte Carlo. 56 entrepreneurs representing combined revenues of approximately $23 billion are in the race for the mantle of the World Entrepreneur of the Year 2018. These individuals represent 10 industries and are responsible for a combined revenue growth of 32% in the last 3 years. They employ more than 110,000 employees and have recorded a jobs growth of 9.2% between 2013 and 2016. And that's the backdrop in which these awardees are going to be looking to win the World Entrepreneur of the Year award. They're also pinning their hopes on higher revenues and creating more jobs, even as they look to embrace disruptive technologies like artificial intelligence. So today I'm joined by Mark Weinberger, the Global Chairman and CEO of EY, to get his views on the opportunities for growth and the challenges that lie ahead. Mark, always a pleasure. Thanks very much for joining us again here on CNBC TV18. You know, the theme of this year's awards is disruption, and we're seeing plenty of that, at least when it comes to global trade and politics. President Trump tweeting just a few minutes ago saying that the U.S. will now impose 25% additional tariffs on $50 billion worth of Chinese goods. Is the trade friction the number one risk to global growth today, Mark?
Well, hello, Shireen. It is good to talk to you again. And yes, it's exciting to be at our 18th World EOI event with all these incredible companies, as you said, who are growing their businesses quickly, solving social problems across the world, and really focus on the disruptions in their business and less so on the global trade issues that you're mentioning. Although clearly for the larger companies around the world and themselves, this is a huge issue. There's so much uncertainty today. The trade issue is one of them for sure. The trade issue and the tariffs that we're seeing becoming a tit for tat is not good. It is an economic issue, but it's quickly becoming a geopolitical issue, which is even worse. I mean, the biggest issue is the relationships are very important between China and the U.S. and the U.S. and trading partners. Of course, if you're a U.S. business, 95% of the consumers and 85% of the fastest growth markets in the world are outside the United States. They have to be there. So this, short-term issue of tariffs is a problem, undoubtedly. But most importantly, we have to get to focusing on the relationships between the global trading partners. That has to be good because global trade does lead to global growth.
How much of a concern is that, Mark? Because, we just saw a very controversial and contentious G7 meeting conclude with President Trump basically, calling out Canada, calling out the EU, calling out even India. So when it comes to trading relationships between these partner countries, between allies of the U.S., things don't look particularly bright today. What's your own assessment on what that could mean then for business momentum and business confidence going forward?
Well, the hard part for business is, as I said, there's a huge uncertainty tax when there's things like this that people don't know how they're going to be resolved. But businesses have to certainly focus on the signal and look above the noise. The economy is very strong globally. Trade is actually still going at a great pace. We don't know what's going to happen with these tariffs, when they'll be resolved. What's most important is that we continue to have these open policies and discussions amongst the world leaders to continue to try and keep those relationships out there, even through this short-term negotiating tactics that you're seeing going on between the country leaders. It's clearly one of the many things that businesses are looking at. You see a very sunny day today with growth across the world. The last year we had synchronized growth in over 20 countries across the world. It's the first time in 25 years we've seen that. This year, we're still seeing strong growth. The emerging markets are taking a little bit of hit with the U.S. raising their interest rates recently and the dollar getting stronger. Europe, we've seen slow down a little bit. But businesses are extremely confident. They're investing across the world. And this disruption that you talked about earlier is causing the M&A market to explode with more mergers and acquisitions this year by a large part than we've seen over the last many years. And that's going to continue.
Okay, so you expect the M&A action to continue. Mark, let me talk to you about India and how things stack up for India today. We continue to grow at 7% plus. The government is hopeful that the kind of green shoots that we've seen, the recovery that we've seen for the economy is going to get stronger. What's your own assessment of the India story today in the backdrop of what we're seeing globally?
So India remains a very prized area for businesses around the world to invest in. It's one of the areas that attracts the most foreign direct investment, and as even the India's own numbers that recently came out, we're at an all-time high in foreign direct investment over the last 4 years, great improvements. Private equity and venture capital is increasing significantly, investing in India. A lot of the initiatives that Prime Minister Modi put in place had short-term obviously hits to the economy, whether it was demonetization, whether it was the goods and services tax. But longer term, these are really important major structural reforms for India, and I think there's a lot of optimism around that. We were talking about entrepreneurs just a moment ago. The third most India is the country with the third most new entrepreneurs every year, and so you are seeing a budding new horizon of startup companies in India as well. So bottom line is, with the fast growth in India, certainly there's still issues to work around. The corruption still exists, obviously, you have to fight through. And the ease of doing business, while much better, moved up 40-some places to 100th this past year under the World Bank statistics, still needs to improve. But India remains a very, I think, good opportunity for investment. Of course, you just saw Walmart take a big investment in India and Flipkart just this past quarter.
You talked about the Walmart-Flipkart deal market. Yes, that is a big one. It is still awaiting regulatory clearances here in India. But do you believe that there is more appetite, especially for strategic FDI into India, for the Walmart-Flipkart kinds of deals, and in any sectors in specific that you would watch out for?
Well, obviously consumers, because of the strong growth market in India of the number of people, and the demographic dividend is a big one. And then some of the areas where the Prime Minister and the government have opened up the opportunity for greater ownership than was in the past, whether it be, in some of the defense and construction industries and elsewhere. I do think India is a market that you're seeing companies around the world look at for growth over the long term. And evidence, 7% growth and now surpassing China, certainly a smaller base, but there's a lot of optimism about investing in India for the future.
Let me ask you about the U.S., Mark, because we've seen fairly steady numbers coming in for the U.S. In fact, jobs numbers, the best that we've seen in over 40 years. What's your own sense about growth momentum in the U.S.? Do you believe that we're likely to see this continue? What would your own expectation be on what kind of growth potential we could now see for the U.S. and what it also implies then for the markets?
Well, U.S. obviously is a big factor in global growth. U.S., China drive a lot of the global growth through trade and through economic growth. And the U.S. market remains extremely strong. I mean, we are seeing more jobs than jobless. And so, the really limitation to growth is finding employees in this point in the cycle. We're seeing, I sit on the board of directors of the Business Roundtable, some of the biggest businesses across the U.S. and some European, and they have the highest confidence ratings they have in year. Capital expenditure is on the uptake still. You are seeing M&A activity. The tax reform that happened in the U.S. is providing tremendous liquidity for investments in capital equipment and for M&A activity and for more hiring and pension benefits. We've seen a lot of increase in wages. The real threat in the U.S. probably to global growth, some of this on the trade front, if it becomes a real trade war, let's say, we're not there today, but also is how fast and when the interest rates rise. We've seen another uptick in interest rates by the Federal Reserve. That is something that also often is what causes a slowdown if there's either too quick inflation or too quick of a rising of interest rates. So that's in the back of the minds of lots of folks. But I think you're going to see a strong U.S. economy and also more investment into the U.S. with some of these tax reforms where there's less barriers to that type of investment. We're seeing supply chains align with that as every day.
So strong U.S. growth to continue, and of course interest rates, the expectation is that we possibly will see another 2 rate hikes by the U.S. Fed. But Mark, I want to come back and draw your attention to the U.S.-India relationship. We've just seen the Commerce Minister conclude a meeting with his counterpart in the U.S., and there are concerns that President Trump has been calling out India specifically for high tariffs. He keeps bringing back the Harley-Davidson issue to the table, that there could perhaps be unilateral action from the U.S. when it comes to tariff imposition on India. India has already said that they will impose retaliatory tariffs on the U.S., and those should come into effect later this month. What is your expectation on the situation between India and the U.S. specifically when it comes to trade?
So my sense is that the leaders, obviously the Prime Minister and the President of the United States, have a very good relationship, and that there's recognition that there's great opportunity for cross-border investment, and in fact mentioned the investment that you're seeing in India in the uptick in FDI is driven by the U.S. investment. So I don't necessarily see the barriers there. I think there's going to be great opportunity for continued cross-border investment. So I have no reason to believe that that'll change.
Okay, Mark, let me then ask you, the theme this year is disruption, and it's all about embracing technology. What are you hearing from CEOs? I mean, trade, tariffs, I mean, all of this is stuff that they will have to deal with, but outside of the external, what are they most excited about? What are you most excited about? And also about your plans for India. Are we likely to see you hire more here in India?
So EY, from our perspective, of course, 250,000 people in over 150 countries. We're going to hire 65,000 people again this year. We have 40,000 people in India across the whole continent, and the country of India and the continent of all across Asia. And they're not just people who serve us in India, which is a very strong and good market, but across the world. We have an innovation center set up there. So we see great promise and continue to hire more people across India. And you're right, disruption to the entrepreneurs who are here and to companies are looking at what they can control, and they are figuring out how do they get more innovation, how do they get greater consumer experiences, how do the industries continue to converge so that they can provide what the marketplace is looking for, are top of mind for companies here. Artificial intelligence, big discussion. One about the opportunity, but some about the risks, and a real recognition that businesses have to take responsibility when they grow AI, that there is an issue with regard to jobs and regulation and privacy, and that all has to be accounted for as well. So lots of discussion here about all those issues.
I'll end then by asking you, Mark, the pecking order has changed so dramatically over the last few years. It's really dominated by the technology companies, the Apples and the Facebooks of the world, dominating, the leaders of the pack, so to speak. Do you expect that to continue? The traditional industries that used to dominate global mind space and even the markets by way of market capitalization, do you expect that it will continue to be tech-driven?
So it's a really good question. Certainly you're right. In the U.S. in particular, the 5 or 6 largest technology companies command the biggest portion of the stock exchanges. But increasingly, Shireen, every company is becoming a technology company. You're seeing the likes of Walmart now get into e-commerce. So is it a technology company like Amazon or not? You're seeing companies like Tesla, which has more lines of code in it as a car company than Facebook and Twitter combined. Is Tesla a car company or a technology company? You're seeing EY hiring 2,000 more data scientists this year on top of 20-some thousand data analysts we already have, getting more and more looking at asset-based technology solutions. So I think what you're going to see is businesses adopting more technology and more companies becoming technology companies, and that's going to continue to be a big driver of economic growth.
Well, Mark, it's always a pleasure. Wish you the very best of luck as you get ready for the World Entrepreneur of the Year Awards. Of course, the ceremony takes place tomorrow, and we'll know who the winner is. But always a pleasure. Appreciate your time here on CNBC TV18.
Always a pleasure, Shireen. Thank you, too.
We'll take a short break, but don't go anywhere. On the other side, we talk about the risks and challenges to global growth with Annette Kimmitt, Global Growth Market Leader at EY, on the EY Growth Barometer findings. That and more when we return.